Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Here's your U.S. markets wrap with me, Ryan Huang. And it's back down again for markets as we look at red on the screen. The S&P 500 down 3.5% at 5,268. The Nasdaq Composite was the biggest loser, falling 4.3%. And we have the Dow Jones Industrial Average dropping over 1,000 points, 2.5% lower to 39,594. And among the biggest losers, NVIDIA losing nearly 6%. Meta Platforms lost almost 7%. And same for Tesla, down over 7%. Seems like we've got a bit of worry over whether the short pause on some of these duties will last, and also what else could be the impact on the economy further down the road. For more insights, we are joined by Dilin Wu. She is the research strategist at Pepperstone. Dilin, thanks for joining us today. Good morning.
Hi, good morning, Ryan. How are you?
Doing as well as I can. I imagine you're quite busy trying to track the back and forth. And talking about back and forth, it's back down again. How do you make sense of what's going on in the markets right now?
Well, actually, I feel like Nasdaq down hard after a huge surge by 12.5%. I mean, all roads lead to big moves higher in gold and high equity implied volatility. And US CPI was weaker, but the move was playing out before risks of foreign entities repatriating capital with the market seeing the Trump about turn due to increased system risk. Plus, lots of reports that the China tariff rate is actually 145%, which means the U.S. average tariff rate is actually north of 25%, not 10%, assuming no drop-off in China's exports, which there will be. So I would say market is repricing the headlines again, and we're seeing higher volatility at the moment.
Yeah, so 145, not quite a 125 in the prior session that folks are focusing on. How are markets pricing in the potential retaliation from China? What are we looking out for here?
Well, actually, I feel like China is pretty much ready for tat retaliatory measures. As U.S. announced they will implement 125% or 145% for real to China. China just said, we are going to implement another 50% on U.S. So I feel like two leaders in China and U.S. are not going to step back in the short term, but it would be pretty much positive news for the equity or the risk market in general if we see headlines like the two countries can sit down and have proper negotiations or conversations.
Yeah, and talk about what's being priced in the markets. How have markets been pricing in the latest movements, especially when you look at the bond markets? That hasn't been going as what some might have expected.
Yes, actually the market's seen extra jump lately. Gold rebounded after some profit taking and forced selling. But what really surprising is how, I would say, aggressive the U.S. Treasuries normally a go-to safe haven are being shorted. I just saw the 10-year yields even spike above 4.5% the day before yesterday. That's not something you'd expect during a risk-off environment, right? And I personally can think of two possible reasons. The first one would be if this isn't just about liquidating winners to cover losses elsewhere, then maybe markets are bracing for a deeper recession. And another explanation would be the bound vigilantes making a comeback, punishing Trump's reckless tariff policies.
All right, so that continues to be closely watched as we see those 10-year bond rates push up 0.04% in the latest session. So that is something, I suppose, worth looking at as these tensions continue to unfold. And talk about tensions, despite the tensions, we saw the Hang Seng Index in the latest session move up higher. What's the thinking here? Because you might imagine you could be bracing for more headwinds. There's so much uncertainty, especially when it comes to China. What's the thinking here?
Yes, indeed. Actually, I was quite surprised that Hang Seng increases after this kind of headlines. And I also saw that both defense and technology stocks showing strong gains. And I think there are still two main reasons behind this. The first one could be the authorities reiterated their firm stance of fighting to the end. And last Friday, China tightened export of heavy rare earths, which is quite positive for the defense sector. But I think the more likely scenario is that if people front-running or betting on the national team, expecting them to further step in, especially after Alibaba and Tencent just got a ratings downgrade, yet we still saw tech stocks rise. So rather than calling it a succeed in confronting Trump's rising tariffs, I tend to view the Hong Kong stock market rally as more of a preemptive move by investors, expecting action from the national team. Yeah.
So a bit of speculation involved here, some retail folks maybe jumping ahead of what they imagine might be state intervention to help prop up markets. Okay, so looking at what we have on the table, you've got a lot of uncertainty. Companies and investors have been struggling to figure out what's going down the road or what's happening down the road in a week's time, in a month's time, or even a year. And we've seen some companies already cutting back on their forecasts, withdrawing their guidance, and we are heading into the earnings season. What's your expectations of how this could play out for the current earnings season, which kicks off tonight in the U.S.?
Well, actually, every earnings season starts from large financial institutions. So we are expecting JP Morgan, Wells Fargo, a lot of this kind of large banks to release their quarterly report. So I would especially pay attention to how the C classes or the company executives comment on how the Trump tariffs will impact the margin, the profit margin, and the revenues of the company, and also the outlook of the next quarter for sure, because that will hugely, I would say, determine the market sentiment for the following quarter in the U.S. equity market.
Okay, and in terms of the currency markets, some of the interesting moves I imagine to watch out for will be what's playing out for the Chinese currency, and to some extent the proxy for China, Australian dollar. What's your outlook on where these currencies are going?
Well, actually, we've already seen that China's authorities lowered the Chinese yuan midpoint against U.S. dollar by 28 pips to 7.2066-ish, its lowest level since September of 2023. So I think this signals they've opted for a mild currency devaluation to address the export pressures. So after the panic sell-off in the dollar subsidies, the U.S. tough tariff stance could continue to put pressure on the yuan. Well, that being said, there's been word that the PBOC has asked major state-owned banks to cut back on the U.S. dollar purchases, which could help slow down the depreciation of yuan to some extent. Also talking about Aussie dollar, actually higher volatility in yuan should spill into sustained high volatility in G10 forex in general. Plus, historically, a weaker CNY translates to weaker Aussie dollar because few trade the dollar against CNH, as it's typically lower beta and spreads are quite wide. But if the relationship with Aussie dollar against US dollar picks up, then the macro funds will be tactical sellers of the Aussie dollar as an expression of long dollar CNH.
Okay, so a good wrap up of where markets are right now. It is back down again with all the nervousness and the focus on the headline number, 145%. That is the latest levels of tariffs on China. And helping us out this morning is Dilin Wu. She is the research strategist at Pepperstone. Dilin, thanks for your time this morning.
Thank you.
All right, catch up with you again soon. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.